I am here joined by Mr. Shikhar Aggarwal, who is Joint Managing Director at BLS International Services. Hello, Mr. Aggarwal. Welcome to our show at NDTV Profit. Let me start with margins. Now, why I'm starting with margins? Because of the acquisition that you did recently, which has impacted overall EBITDA margins for your company. Just wanted to know, how long do you expect the Artifidal's low margin profile to drag down the consolidated margins?
See, if you see this quarter, we have done a revenue of around 736 crores, which is around a 50% growth compared to same quarter last year. Our EBITDA has surged by 30% to 212 crores. This quarter. And if you see our margins from the visa business is at 40%, EBITDA margins, which is the highest ever. And as we had said that our margins in our digital business has become a little bit lower because of the acquisitions of Artifidal, which is at a 3%, EBITDA margin, on the revenue. And that is how we have acquired this company. So that is why consolidated, you see the margins at this level. And we expect the margins to sustain at this level currently.
I was referring to the IDBI Capital note. In fact, that brokerage house is seeing at least a 40% upside from the current levels when it comes to BLS International. So that note mentions that for FY27, the EBITDA margins could reach to 29.4% as per their estimate. Do you concur with their view?
See, our objective is definitely to maintain whatever we have achieved. As we said, in the visa business, we've attained 40% margins in digital business because of the Artifidal acquisitions. We have attained some other margin consolidated level. I'm not sure, but I think we've done around 27, 28%. And our immediate objective is to maintain the margins. But going forward, definitely, in our digital service business, we might see an increase.
And when it comes to the revenue growth outlook, what is the kind of number that you're working for the next couple of years?
See, if you see where we stand, last 5 years, we have done around 40 to 50% CAGR growth. Now the base of the company has become bigger, but definitely still, on an increased base, we feel that next 3 to 5 years, we can do a 20 to 25% organic expansion on our organic business. This growth, will be coming from our existing contracts, enhanced operational efficiencies, and driving the technological enhancement. On top of that, if you add, there are multiple tenders, which are out there in the market that we are bidding for. If we get a certain market share, definitely we can also grow further. We are also looking at future acquisitions, that we have been continuously evaluating. If you see, last year itself, we did acquisitions worth around 1,300 to 1,400 crores. So that amount of cash is again lying in the books of the company. So we are definitely looking at further growth, through all these aspects.
So 25% growth on the organic business you're targeting. You're looking out for acquisitions. For acquisitions, what is the key criteria that you would focus on? Will you focus on margins or will you focus on the growth prospects?
See, I think the companies that we have acquired last year, if you see, we acquired the companies at a multiple of 6 to 7 times, upwards, they were doing more than 35 to 40% EBITDA margins, a monopoly business, wherein we can synergize with our existing business, we can have economies of scale, etc. So similar kind of business models we are looking at, service industry, upfront collection of money from the public, we can synergize our existing operations, we can increase the profitability and maintain the cost. So similar lines of business we are looking at in the future.
Understood. And also, Mr. Aggarwal, what is the current status when it comes to, MEA's temporary ban on new tender applications? Have any progress been made?
So as we said, the matter is sub judice. So whenever the result is announced, we will be announcing.
Understood. Also, I was going through a con call and you had said that your estimation shows 50% of the visa market is still not outsourced. How aggressively, are you targeting this unaddressed segment?
See, currently, as I said, the tenders that we're expecting are all from the outsourced market, which we feel is only 50%. Then there is this market where governments are outsourcing for the first time, not only visa services, but also consular services globally. So we are looking at, these opportunities also. They are not very structured. We don't know the timelines, etc. But as we said, in the past 1-2 years, we have won contracts with the Philippine government, for passport renewal, etc. We have won with other governments. We are also targeting many other territories in the near future.
Understood. Also, with the new geographic, like you have Kazakhstan and Cyprus, how do you assess, scalability and profitability when it comes to these new markets?
See, we have recently announced that we won two new contracts for the Cyprus government, Kazakhstan and Russia. We are going to roll out the operations very soon. We have won a bigger contract with Slovakian government, a global contract to be deployed in 80 countries. So I think for us, wherever the volume lies, our target is to maintain the EBITDA margins that we have achieved. And we have now already present in 70 countries. So our cost has become streamlined. So whatever new contracts that we get in, we can have economies of scale using our existing offices.
Lastly, sir, just wanted to understand what would be your revenue mix when it comes to the visa segment and the digital service business, say 2 years down the line.
See, our target right now, average, if you see, our revenue mix is around 70% comes from the visa business, 30% from the digital business. We see major growth coming in both the businesses as we go forward. So our revenue mix would probably remain the same on the long term.
Thank you, sir. Thank you for joining us and giving us the way forward for BLS International.